Payments Podcast from Bottomline Technologies.
Greetings and welcome to the Payments Podcast. My name is John Gaffney and I'll be your host for this episode that examines the role that is arguably the centerpiece of any company's financial picture, and that, of course, is the role of the treasurer. While treasury functions and responsibilities may differ from company to company, when information is needed on liquidity management, cash positions, and cash forecasting, there's always one executive expected to step up and deliver. In most cases, it's the office of the treasurer. With economic uncertainty putting the spotlight on liquidity and payments technology, the treasurer's role is evolving. Now, here to discuss that evolution is one of the foremost experts in the field, and that's Tom Hunt. Tom is Director of Treasury Services and Payments at the Association for Financial Professionals, and he directs the thinking that helps educate, inform, and certify the AFP's membership. If you're not familiar with the AFP, you should be. There's some great content, and they are a great association. They're the certifying body in Treasury and Finance and administers the Certified Treasury Professional and Certified Corporate Financial Planning and Analysis Professional credentials, and those set the standard of excellence in the profession globally. The group is also currently preparing for its annual conference, which will be held in San Diego this year on October 22nd. Welcome, Tom.
Hi, thank you. Happy to be here.
And we're happy to have you. Tom, I'm gonna lead off with a quote that is not from the great content on the AFP site. My apologies for that. It's from a report that I read about the treasurer from Oliver Wyman. And here's the quote: "As successful treasurers demonstrably add value to businesses, they are transitioning into roles that embrace and initiate strategic input. It's a sequence that in turn boosts the visibility, reputation, and stature of the job as it establishes itself as one that demands the mindset of a progressive business partner." Now, given your remit at AFP, I know that's music to your ears, but seriously, how do you think the corporate treasurer's role has evolved? And what about that evolution is most exciting to you?
Well, first of all, that's a great quote from Oliver Wyman. Very well written. And they actually partnered with us on our strategic role of Treasury survey. So a little bit of insight into that. And in the 14 years I've been here at AFP, I've definitely seen the role evolving, becoming more of an ally, more of a business partner, having a bigger seat at the table, especially when it comes to the C-suite. The Treasury department's being called on to do more, certainly around liquidity planning, working capital. Some of the real blocking and tackling things of Treasury have really become more in the forefront, especially as more of an anticipated recession was expected to hit. Companies really pared back. A lot of Treasury professionals really kind of focused internally more on costing out expense projects, whatnot, to help keep the business running. But that's one of the best things that they do. And, as the light is being shined upon them, they continue to rise to the challenge. They're taking on more. They're moving into areas where historically Treasury hasn't been in, managing leasing, managing real estate, a couple areas around that, maybe moving more into insurance, risk management, areas that Treasury typically hasn't really delved into. But, along with that, they're also expanding their roles as a partner. So being a stronger ally with FP&A, working with controllers more and more about accounting aspects, especially as their systems evolve, their challenges evolve, and, basically being a good partner and ally to the business is really where we're seeing Treasury evolve, but more so, becoming, more and more kind of an ally to the C-suite as well, and being called upon to help the company not only survive, but also thrive for the longer term.
Yeah, as we said on the briefing call, I just love this line, so I have to put it out there. Treasurers now get the high back chair, right?
Yeah. Yes, definitely. They're not on a stool anymore in the back of the room. They're they've moved to the front and center, and they're there along with their other counterparts, from from various aspects of the business.
So it reminds me of an issue that seems to have been all the rage about 6 months ago, and that was connected finance, which is still talked about. And the concept being that the treasurer, CFO, and other finance leaders are breaking out of their silos and being, as we just said, more connected to strategy and leadership. Do you still hear a lot from your members about being more connected?
Absolutely, especially on projects that they get drawn into or are leading that are company-wide. A lot of companies focused on working capital in the last couple of years. I think kind of leading into COVID, they really did a lot of balance sheet planning. And then the next step would have been unlocking a lot of unused cash. And, when it comes down to the cash conversion cycle, that spans across multiple departments. And so leading a kind of a task force or being part of a task force to really dive into kind of the levers that the company has to, for accounts receivable to accounts payable, and then the real gray area is inventory. And as companies built up their inventories just in case, Treasury is really helping kind of figure out, what is the right level, but doing the analytics somewhat behind that, but really focusing primarily on DSO and DPO, but also, spanning that larger project base and really getting their name out there further. And, that stems or that leads into other areas like looking at discounting terms or credit analysis for clients or, heading into a recession when companies were, doing bankruptcy analysis, looking at synopsis of, okay, if this is a key supplier, vendor, customer, what are some solutions we can put in place to help them? But then how can we accelerate cash, or how do we, lengthen cash if we're paying out? So it's being a partner, and that is probably, I want to say in the last couple of years, it's been a real high focus area, aside from liquidity planning, which is really where Treasury shines and really where their expertise comes out.
So, Tom, as this evolution takes place, I'm sure there's going to be some bumps along the road. Do you sense any frustrations about the ability for a treasurer to continue on this path at the speed that they're traveling?
There's always a lag, right, between challenges and technology acquisition. So trying to do more with less, trying to make sure that they can keep up with the pace and the speed of what they're being asked for, but also having those resources available to meet those needs. That's a constant struggle. If I had to guess, it seems like companies from I hear are probably 3 to 4 years behind, and then they make the big jump if they put technology in place and keep up for a good portion of time. But the challenge is getting the IT resources and getting the onboarding and the funding. But by demonstrating that Treasury is well capable and they're a powerhouse of information and analytical capabilities, they can demonstrate their value to the company and also to the underlying businesses within the company.
So let's talk about one of the challenges that I know it has to come up for them, Tom, and that's fraud, an unfortunate topic but necessary. So you guys did a report called the Payments Fraud and Control Survey recently. Reported 65% of organizations were victim of payments fraud. And of those organizations that experienced attempted or actual fraud, 71% were victims of business email compromise. What do you feel like your members need right now to fight payments and social engineering fraud that they don't have right now?
It's always interesting to find out those companies that are susceptible to that could probably put in some simple process procedures and vendor products, bank products to really help them kind of mitigate that risk. But it's also, I would say, the people that respond to that survey are kind of more of the well-informed. I would say that they're probably using 80 to 90% of the capabilities, and they're having conversations with their bank or their vendor about other options to explore for that next threat that's around the corner. BEC scams is still the number one or one of the highest scams that the FBI reports. It's the social engineering aspect that is really hard to control and really hard to get under control. So it's that continual balance of being ever mindful of, is this a fraudulent email? Is this a fraudulent vendor? Change of banking instructions. It's really about having the proper procedures and controls in place to make sure that the company mitigates that risk, but then also having the support of the senior officials or the senior, even of the C-suite to back that individual on the front lines to say, great, I'm glad you checked with me. There's always an open door to make sure that we have this in place. And more companies are doing that. I think as Treasury becomes a partner and relates to that, making sure that AP has the same process and procedures that Treasury does, because AP, from that survey, AP was determined to be the most susceptible to BEC fraud. So just extending those resources, making sure that they're using the proper protocols, and they have they've got the backing from the C-suite, or they've got the backing from the senior level officials within the organization to support that mindset.
Well said. So we recently here at Bottom Line published our own research report. It's called the Business Payments Barometer. And one of the set of findings in there that surprised me had to do with banking relationships. Corporates, according to this report, expect a lot of automated and embedded services. And I know you have a virtual event coming up on bank relationships. What are the things that you expect to hear at that event?
Yeah, no, thanks for bringing that event up. It's, we're really focusing kind of more on that operational aspect around bank relationship management. I think some of the things that we're telling, and we saw it a little bit in our liquidity survey this year, is the ease of working with an institution. Because a lot of corporates have their money with their banks, in bank deposits, and the number one value driver behind that is the relationship. And so you take a completely intangible product with extremely qualitative measurements, and you try and quantify and use quantitative methods as much as possible, in terms of managing fees and whatnot. But I think what we're also looking at as well is what happened in March with the regional banking crisis, and that's had a profound change on relationship management and mindset for a lot of corporate treasury professionals. We saw there's a big shift to the larger banks as a result, but with that comes the opportunity for kind of more of that middle-sized corporate to still find value in their relationships, and maybe some smaller institutions that have a niche capability or an offering. So I would expect to see a little bit of discussion about shifting providers, but I would really expect to see kind of a large discussion on ease of working with that institution. How quickly can I get an account opened? How quickly are my questions answered? I need to have this account in place for this transaction, and it's got to be done by X date. And KYC is a big issue. Continues to be. AML is a big part of that, and that all plays into the whole relationship formula. And that formula is evolving and always changing. It tends to be safety and soundness can be a pretty important aspect, which we saw kind of more from the liquidity survey. But then, there's also a shift to the overall relationship, and that's a bigger mix in terms of, if you got a large client or bank group, and what the mix of those institutions are and what you plan to kind of delve out in terms of what your needs and wants are in terms of your banking services. And so it's a tough question to answer, but I would expect that there would be a fair amount of discussion around just the nuts and bolts of Treasury, just opening, operating, and maintaining those accounts and relationships.
Great, very well said. So let's switch to another topic, Tom, in the news, and that's real-time payments and FedNow. Everyone's talking about the FedNow launch. We were just talking about it previously. But I know there's another issue on your agenda, and that's using real-time payments for B2B payments. Why do you think B2B payments haven't picked up more aggressively?
Yeah, great question. And that's one thing that I continue to kind of be curious about and continue to monitor. And I know one of the major roadblocks is, a lot of corporates will send out ACH payments, and those typically go through a batch. They're entered into the AP system or a procurement system. A PO is generated. It's a very long, or it can be a long, but it's all, it's a very well-defined process within an organization. And to make changes to that to enable a payment to go out, in a moment's notice, has to have a good business case behind it. And when you kind of break down that batch cycle and you're doing one-off payments, it's, aside from doing wires, it's going to have to be, there'll have to be a good business case and a good costing out to make it efficient for companies to do so. Now, where it seems to work well is for a lot of real estate firms that are doing funding kind of on a moment's notice. That's probably the best application that I've heard of. I think with the B2B side of things, you've also got all the remittance information that needs to come with that payment. I know from our previous payment surveys, it's the payment goes out via ACH, but all the remittance information goes out via email. Hopefully we can get away with that. I know the real-time payments rail was built with the capability to include remittance information. Now, will the systems catch up, and will the systems that corporates and banks need to put in place really enable that? So for now, I think a lot of business-to-business transactions are trying to figure out where they can use it, but happy to see that it's on board and online now. It's been a few years in the making.
Yeah, it has. It's several years in the making. So, Tom, that gets me down to my last question. We've covered the evolution of Treasury up to this point, but I'd like to ask you how you see it evolving over the next 1 to 3 years. Do you think there's another level to gain for the treasurer?
There's always another level to gain for the treasurer. Every challenge and every opportunity or every crisis that comes to Treasury, they always rise to the challenge and they always meet the needs. And hopefully they exceed those needs as well. What could be happening from an economic standpoint? We just are coming out of the pandemic. They certainly rose to the challenge around that. They rose to the challenge around the regional banking crisis. So anything macroeconomic, if there's a pending recession, if we ever get there, or if the Feds hold off on raising rates, they're going to manage accordingly, keep an even keel and, an eye on the horizon, definitely. But, expanding their role as a partner to the organization, as a partner to businesses, will continue to evolve. And that's going to present them with unique opportunities that, enables their staff to do kind of more cool special projects, helps their staff grow and develop internally, stay engaged, as we're all more and more remote working. That's always a challenge to keep your staff engaged, mentally focused, happy, continue to go to work every day type of an effect. But really it's more expanding that role and opportunity for the department across the organization, and helping the company evolve and grow as well.
All right. Thank you very much. That is a wrap. My guest today has been Tom Hunt, Director, Treasury Services and Payments for the Association for Financial Professionals. Tom, I'd like to thank you for joining us today.
Thank you. My pleasure.
And once again, the AFP annual event is coming up in San Diego, October 22nd. So thank you again, Tom. I would like all of our audience to join us next time at the Payments Podcast. We're on all your favorite platforms, SoundCloud, Apple, and Spotify. And we'll see you next time.
Payments Podcast from Bottom Line Technologies.